You mentioned Bitcoin, and maybe let's start there in terms of there's a lot of folks in the institutional asset management world, financial advisors, who they were very bearish. They were critics. They said there's no way this is going to work. I think now we've gone from kind of contrarian to consensus being, okay, fine, let's put 1% of assets in. There may be some non-correlation over really long periods of time, or there may be some asymmetry, but let's not get too crazy. Let's not try to get too confident here. We'll put 0.5%, 1%, maybe 2%. How do you think about the sizing of these assets, especially when you look at, 5-year Sharpe ratios and kind of, you get more sophisticated analysis? Is this something where you think people will stay kind of in that low single-digit percentage allocations? Or do you already see financial advisors talking about, no, actually, we want, target allocations of 10, 20% to the space? Or what are you seeing and hearing? What do you think people should be doing?
I think advisors are still in the low single-digit area. That's where I am in my advice to consumers. In my book, The Truth About Crypto, I talk about a 1% asset allocation. And I say that because it's a safe, easy, non-threatening way to get started. Meaning, if you put 1% of your portfolio into this and it blows up on you and it goes bad, so what? You'll call it annoying, not devastating. In other words, if you put 1% into Bitcoin and Bitcoin blows up and becomes worthless, you're not going to destroy your financial security. You're not going to find yourself in poverty and retirement. In other words, it's okay to invest 1%, because if you do 1% and things go as well as many hope, that 1% will materially improve your financial future. You might even be able to retire sooner or with more money. So the upside reward dwarfs the downside risk with a 1% allocation. Many people are arguing that a more effective approach is 2 or 3 or 4%. One study from Yale says 6% of assets is all you need, but everybody's talking low single digit. My assumption, my belief, my prediction for you, Pomp, is that over the next 10 years, as people invest 1% or 2%, they're going to discover that it grows faster, it doubles faster than any other asset class. It'll double faster than stocks or bonds or real estate or gold or oil. And as a result, the 1% allocation will become 2%, and then 4, and then 8, and then 16, and they're not going to want to sell because they're going to realize that the price appreciation potential still persists, and they're not going to want to sell. So while they might start out with a low single-digit allocation, inertia will take over, and they will discover, they'll turn around one day and they'll say, oh, I do have a 10 or 20% allocation, simply because the 1 or 2% I bought has grown so much in value relative to the rest of my assets.
And when you think about that, is there a rebalancing that you usually advocate for, or is it something where it's just a buy and hold it forever, and if it grows to be, 50, 60, 80%, and kind of all of the promises of the technology end up being realized, just leave it and don't incur taxation or whatever? Like, how do you think about if you are so fortunate that you make the right decisions and it grows in size, how do you think most people should deal with that?
If you are going to manage the money the way you're supposed to manage money under modern portfolio theory and effective money management, you should rebalance. It helps you take money off the table. It captures your profits. It secures them. And when the prices occasionally dip, as they're doing right now, it creates a buying opportunity. So yes, you should rebalance. Having said that, I will tell you that I have never rebalanced my crypto allocations, which is one of the reasons I am very overweighted in crypto right now, because my wife and I have been buying since we got started in Bitcoin in 2012, started buying in 2014. We've never sold any of our positions, because although I, of course, believe in rebalancing and I do it everywhere else in my portfolio, I continue to believe that the upside is incredibly strong, and I'm not willing to pare back because I believe it's the best asset class in my portfolio, and I don't see the point of rebalancing. I recognize I'm taking bigger risks as I do it. We are willing to take those risks. We can afford to take the risk. We don't have children, so there's nobody's inheritance that we're destroying. So, we're just having a good time with it. But for most folks, I would say, yeah, rebalance, be prudent, do the right thing. And I'm going to throw another thing out there that you quickly mentioned in passing, and that was taxes. Taxes are a very big, significant issue for crypto owners, like all investors, because you got to pay taxes on the profits. This is why I'm so excited about Fidelity's announcement that they're going to allow the 401k plans that Fidelity manages, they're the world's biggest 401k provider here in the US, 2.7 trillion in assets for 23,000 employers, over 10 million workers. They're now going to let all of those workers buy Bitcoin inside the 401k. This is great news because the 401k or IRA is the best place to be buying Bitcoin because you're doing it in a tax deferred environment where you can trade without having to incur taxes as you do.